Okay. What we're going to we're going to try an experiment and do a mock negotiation today, right? So that's the plan in this session. Um, Typical negotiations are lots of levers you can pull, and the discussion can go in many directions. Question is, how do you take it in a specific direction? And we'll see, we'll see how our experts do today. Uh, Manisha will serve as the entrepreneur interested in the license. Okay? So here is a case which we'll present to you. You can listen to the conversation, and then, you can also with your hand up, you can ask specific things without interrupting the conversation too much. Okay, you can point to specific points, and then we can take it ahead as well. So let me just give you a little bit of background first. So here is the case, right? All of you can see it, right? So party one is an academic institution, UC, represented by John and Richard. Both of them are experts in tech transfer, right? Many years of experience, intimidating figures. And party two is a small business, small co, represented by Manisha. Okay, she is the founder of that company. Her company is a 4-year-old company that's selling wound dressings, right? It has a current turnover of about $1 million a year. That's about 8 to 9 crores, right? And it has made inroads into several hospitals in India. It's profitable, right? Margins are only 10% right now. And Manisha is keen to grow it faster with more investment and show much higher margins. Probably with this kind of a margin, she may not be able to attract that kind of investment either, right? So she needs higher margins. She thinks she needs to produce and sell a high value premium dressing for diabetic wound care, a growing global need. And in India, it's a large emerging need. UC has an unencumbered technology, right? That means there's no strings on it. It's free to give, to make advanced wound care dressings. That's been shown in animal studies to work very well on diabetic wounds. So you have very good animal data, and it works very well, right? But it's also a crowded area, lot of players in that space. But UC's technology has shown better results than the market leader in the animal studies. Okay, so you have clear data saying that it works better. UC has filed patents, received grants in US. They have received grants also. US, EU, India, China, Japan, and patents already finishing 5 years. No licenses so far. Okay. So small co, that's Manisha, has approached UC for a license. Manisha's asks are, she is asking for a worldwide license, an exclusive license with option for assignment of the patent. Okay. Minimal upfront fee. Deferred payments or running royalties is preferred. Small co will use this to raise money from investors for advancing the technology further. And small co requests UC for a proposal, right? So they've asked for a proposal, right? So here is what she's asked for: a worldwide license, exclusive license with an option for assignment, minimal upfront fee, deferred payments, running royalties is preferred. And small co will use it to raise money and is going to go to investors. These are the data points available to you. Okay? Any questions so far? Yeah.
Here you show it has shown some experiments on animals. So
Yeah.
for such type of dressing, some clinical trials and FDA approval is not required?
Maybe needed, right? So they've only done animal studies so far, right? So that is something which maybe she has to do going ahead. Efficacy data in animals, yes. Humans, no. Yeah. So comparative data with the market leader is there. Yeah. So market leader is XYZ, and you compared it with that in animals, right? Okay. So that's the current situation. Is that fine? Okay. Now, I'm going to, just give me a minute.
Yeah.
Can I just?
Yeah, please.
Okay. So now I'll request Manisha to close her ears. So this is what they know at the back end, right? Uh, so technology and IP, of course, has been granted. It has FTO, they know it. Okay. Preclinical data is quite strong. UC does not have any other inquiries at this time. It's only inquiry. Inventor is planning an academic human trial but needs to raise funds. They know that. Further development costs and timelines, clinical trials and regulatory approvals will take 2 years. Okay? Investment towards CTs, clinical trials, regulatory approvals, India, US is planned. Probably manufacturing facility will cost at least $1 million. Okay? Small facility for early stage sales. Licensee cannot earn anything for at least next 2 years. Okay, from this. The global market is about $500 million, right? Growth rates, US is 50%, EU is 25%, India is 2%, rest of the world is 23%. That's the market share globally. The industry is very crowded. A lot of the market shares are very fragmented among many players, right? And regional leaders vary. Person who's leading in the US is not the same as the person leading in India, say, right? US technology valuation exercise based, UC's technology valuation exercise based on some assumption, secondary research indicates valuation about $2 million with no upfront fee. Running royalty would be 5% on net sales if there was no, right? And Autumn database indicates that the medium range of royalty in this industry is about 3 to 4%. That's what they know. Okay. So now, Manisha, you can open. Your turn to close your ears. Okay. So now, Manisha has done her homework a little bit. Okay. Smallco thinks that this technology can be useful for other chronic wounds as well, right? Not just diabetic wounds. Published data looks good, but Smallco's clinical advisor thinks tech may not be differentiated enough, right? It's not sufficiently differentiated from others. Further development costs and timelines. Smallco has identified predicate devices in India, US, which may reduce costs and time significantly. Superiority studies in humans will be needed to establish performance edge of the product. So in humans, right? Smallco expects considerable spending in studies by KOLs in the US, key opinion leaders. You'll have to do studies with them if you want to sell in the US. Smallco wants to focus sales in India, Middle East, North Africa, and Southeast Asia. Okay? Smallco will go for US FDA approval only for branding and KOL studies and not immediate sales. They're willing to do all of that, but they don't want to sell in the US yet. Okay? Because it's a different ball game altogether. It's a competitive industry, but key market leaders have no product for diabetic wounds. Okay? And there is a chance. So market leaders don't have product for diabetic wounds. Okay? They have products for other wounds, not necessarily for that. There's a chance of merger and acquisition by a large player to fill up a gap in their portfolio, right? The Smallco analysis is that they should be targeting margins of 50%, target growth rate of about 200% year on year in the first 5 years after they are allowed to sell, right? This kind of margins and growth rates are important to attract venture capital funds, and investors will prefer a company that the company has clear ownership rights of the patents, right? Fundraise plan, seed round in the next 6 months is $2 million, Series A $6 million, Series B $18 million, 24 months and 48 months. Okay, that's what they want to raise. And all this will go towards their manufacturing, sales, marketing, all of those kind of efforts, right? That's the hope and the plan. Just to complete a little bit, at the back end, Manisha is keen that necessary thing for her, sort of very important for her discussion is it should be exclusive, right? US, EU, India, surely she wants. No limitations in scope of product and indications, right? Option to seek assignment makes it more attractive for merger and acquisition, and investors will prefer that. So investors will probably, want to see that if they want to put in money. Preferences are upfront fee low. Every 1% in the royalty rate, right, will decrease her company valuation by 5%. She knows that. She has done her calculations that if UC charges her an extra 1%, it's going to reduce her valuation by 5%. Okay? And investors may be willing to pay out UC to the extent of 5% of a funding round. Okay? And close the deal. Okay? So that's what the facts are.
Last line,
Yeah.
investor may be willing to pay out.
Sorry?
Last line, what it means?
Last line, it means that when investors put in money, they will put in money for the company. They don't want money going out. It is not towards the objectives of it doesn't serve the purpose of developing the product, advancing it, and so on and so forth. So any money that's given to anybody else is lost money for them as far as the company's progress is concerned. So they will not be willing to let anything more than 5% go out of whatever they are putting in. Okay, if they are putting in 2 million, they'll be willing to let out 5%, not more than that. Otherwise, they'll say there's no deal. You understand? Because why would they give it so that CSIR or somebody gets rich, right? They're not interested. Right? They have other options to invest in. They'll rather let the company die.
So there is no data of what the company is having right now in their kitty, because already they have to give 2 million to them, and seed raise money is also about.
No, this is what we have just said. The proposal has not yet come from them, okay? So let's begin the conversation. We'll see how it goes, right? So over to you,
Oh,
both
sorry,
of you.
dozed off.
So I think do you have a mic? Yes.
Yes,
Good.
I do. I
Yeah.
just wanted to thank you for coming in, Manisha. I'd like to
Yeah.
hear
Oh,
more
good morning to
about
you, Richard.
your company and the industry. I'm Dick Cahoon, the director of the office, and I invited in my senior colleague, John Fraser. I always like to invite him because he thinks outside the box, and I thought he might add some interesting flavor to our discussion. So,
Yeah, thank you. Thank you very much, Richard, and pleased to meet you, John. It has been very nice to meet you in person. I recall all the interesting conversations we had about the technologies available with you, and it's really nice to get your time to be able to meet you. So as we discussed, we are interested in the technology which has been developed in your lab, which is technology which could be used for developing some of the advanced wound dressings, and really keen on licensing that, and would love to know the terms of licensing. If you have some commercials already thought out, would love to know about that. Yeah.
John, did you want to say something?
Yes. Good morning, Manisha. Thank you very much for coming. We appreciate your effort of coming and meeting with us. We've done our homework. You've got $1 million in turnover, so you're very bankable. The market in India, however, is only 2%. You're a young, small company, but you'd like to develop this and ultimately get assignments. So we're going to suggest that we start this by, since you're very bankable, going to your bank, getting a loan for $1 million, paying us $1 million up front, and we will sell you the patent. Because I don't want to live with the uncertainty of whether you're going to survive, whether it's going to work. India is only 2% market, so that's the initial offer.
Thank Thank you very much.
Outside the box, like I said. Yeah.
Thank you very much for that, John. But at this point, we are not really interested in like completely paying for all the rights upfront. I don't think we could do that. We are in a growth phase. We already have some products in market, and we have plans to grow our product range further. Already have certain investments to be done in the company which is committed. So we would not like to have any upfront transactions at this point. Rather, we would like to have a mechanism wherein we are able to put it in different parts, and over a period we are able to get the things. Apart from that, I must tell you that we are a very committed team of founders. We have received lot of support from some of the agencies who are promoting entrepreneurship in India. As you can see, it's a women-led startup, so we are getting special privileges, and we have set up all our plans ahead. We have much bigger ambitions, and I'm sure if our ambitions can come alive, we would make even UC very proud to have a much bigger blockbuster deal. I think you shouldn't have any hesitation that we might close down, So I think we need to have some alternate terms at this point.
So,
All
Manisha,
right, so that's very reasonable. I understand where you're coming from. I'll turn it over to my boss. He will become the program manager and will live with the stress of a small startup trying to survive.
So, Manisha, first of all, I'm impressed with your company and your role and all that. You're 4 years old, so you're young, the company, and that is a risk for us. Can you allay our concerns about, is this a good risk to take?
Sure. Yeah, so let me tell you, right now we have wound care dressings which are available. We are selling primarily in the Indian markets, but going ahead, we would love to expand ourselves in Middle East and African markets, Southeast Asian markets, so we have much bigger plans right now. We may not be selling immediately in the US, but we would be going for US FDA approvals. We would also be conducting some of the KOL-led studies for the US market introductions. So we would be making ourselves ready for that. We also have certain initial talks with some of the investors, and if all goes well, we might be able to close initial funding round very soon. So yeah.
So, and you mentioned Middle East and some other, right now, our patent portfolio. We have issued patent in India and filed, we've got patents at US or applications EU, India, China, Japan, not Middle East, so that presents maybe a little bit of a problem. But what is it what would you want in terms of rights? Let's just start with that. What kind of rights are you requesting?
Yeah, so we would definitely like to have exclusive rights for the technology, and we would like to have worldwide rights, so all the geographies your patent is covered, we would like to have rights for that. And because we have very ambitious plans for our startup, and to that it is very important that these two conditions are very critical for that.
So you're currently only in India.
Yes, we are currently.
And you're 4 years old.
Yes.
And you're going to develop in India.
Yes.
You have development plans for
Yes.
the technology.
Yeah.
Have you determined about how much is going to be needed to invest to develop the technology?
Yeah, we have some rough numbers in mind, wherein just let me, like, our immediate needs for developing the technology, the current technology is quite in advanced stage, but if we license the advanced wound care dressings technology also and developing that further, we might need to invest in some of the human clinical trials and some of the, because what I understand is that we may need to conduct that, we need to get certain regulatory approvals. So immediate things might be in the range of $2 million.
Yeah.
Yeah.
About
One,
$2 million
Sorry, $1 million.
to
Yeah, yeah.
of continued R&D to get it to
Yes.
ready. Do you have a manufacturing facility?
Yes, we have invested in our own manufacturing facility for our current range of products, like these are also wound care dressings, and that's how we have been able to have sales as well. Like we have traction in the market.
And
Yeah.
so one of the concerns I always have when I love having a licensee that already has an established presence in a market, but won't our technology compete with your existing products?
No.
Uh,
No, we think it's going to complement our existing products. In fact, we are able to create much bigger market segments because we feel it's going to be a significant advancement for our current range of products.
you have then a lot of knowledge about your margins and these products. Do you have a sense of what kind of pricing that you would expect and what the cost of goods sold would be for our technology products?
Yes, so we feel that your products we might have around 50% margins, but we would also need to spend a significant cost and the margins for the distributors, because this kind of segment typically the distributor margins are much higher, much higher than what as a manufacturer we might be getting. But considering all that, we feel we might be having around 50% margins.
I'll be honest with you, I guess you're in India. You're an Indian company, and you got a lot of advantages, and I like that. But I'm concerned about your ability to really service, the EU and China and the U.S. That just seems like such a stretch for a small, young company.
Sure, yeah.
Can I add as an advisor?
Yes, please. Yeah. Actually, we have actually almost 26 advisors over here. And so, yes.
Whether you like it or not, they're your advisor.
No.
I think, Dick, I just wanted to point out that it's really impressive that in 4 years a company has taken products to market, right? And has a $1 million revenue stream in a market like India, which is extremely competitive, right? So I think that speaks volumes about the company, right? And as far as US and EU go, there will be an effort to go in with partners, right? That's what we plan to do, right?
Okay.
We think we would be able to sell in Middle East, North Africa, Southeast Asia, so on, with US FDA approvals. But that's the first phase. But we need to go into the US, European markets. That's important for our plan, for the reason that we have to raise money for doing some of these studies, for entering markets, and it's important that we are actually having plans to enter some of the largest markets, which happen to be US and EU.
In
So
order to
that's
justify for your investors,
Exactly.
for her investors.
Yeah.
Yeah.
Oh, Okay, understood. And remind me again the amount that you're going to be investing to validate, to get approval, to further develop. Did you tell me $1 million?
$1 million, yes.
Okay.
This will be in India, right? This is to get the approvals in India.
The $1 million just for approvals in India.
India
Okay.
and
Okay.
being able to hit the market with the current products.
Okay.
In the US, we do plan to go for regulatory approvals, but not necessarily sell immediately because it will require perhaps a different manufacturing facility and more investments
Okay.
as well. But that is in our plans and it will be subject to our ability to raise investments. So our request to you is to give us terms which
Okay.
enable us to raise money for your inventions, right? The kind of, yeah.
Thank you. So, as it was discussed that you have a manufacturing facility, and I want to question that is it US FDA approved facility? Because
No,
it
it
will
is
take
not.
another
No.
money and big chunk of money to get
No,
that approval.
right now it is not
So
US.
that will add to your investment along with the
Yeah.
trials.
Yeah.
Yeah.
May I comment on this? As a junior guy in the office, I'm the software guy. So my deals are 2 years, huge revenues, and so waiting around for something to be developed I'm not interested. A cautionary note, these big countries, the important thing to do is target the country, plan out who your partner might be, and proceed slowly, cautiously, because things change. Particularly, I'll point out to the United States, the political situation is unfavorable to outsiders. So the ability to move into, everyone wants to move into the American market, everyone wants FDA approval. I would be very cautious and plan. I suspect for the next 2 years the chaos will continue. But planning for these larger markets, that's how you use your time as you build up the credibility of delivering a better product, gaining investors and momentum.
Thanks, John. And also to kind of keep us on track here, and frankly, we're trying to set the Guinness Book of World Records on the fastest negotiation in history, 30 minutes. So, yeah, so, so Manisha, I am impressed with your company, and we like the idea of having you as a partner. We're, delighted. We've done our homework. We've done an analysis of the marketplace, and we have done a valuation, and we've come to the conclusion this is worth an NPV today, $2 million. And we've also looked at the industry. We've talked to some industry, knowledgeable people in the industry, and a 5%. So what I would propose to your company is exclusive worldwide. As I said, I'm a little nervous about this worldwide. I want to talk more about that, and we would say an upfront of $200,000 and
Okay.
a royalty rate of 5%.
Okay.
That's US dollars, right?
U.S. dollars.
So you said upfront 200,000
Yes.
US dollars.
10% of our NPV.
Sure. And 5% of the royalty rate.
Running sales, yeah.
Yeah. I think this sounds very steep. I think you probably should consider some additional factors like, we are a small company and some of the development which has happened, like, I have used, there is a lot of funding that was received for developing this technology. And, as I mentioned, we also have plans to enter in US market, and, it's ultimately going to help US economy as well. So, considering some of these factors like,
Sure.
can we
And
consider?
I'm happy to do that. And you're right.
I would like report of Manisha.
Yes.
We also did a survey, and we found that your patent life had already passed with 5 years. So we are left with only 15 years of time, and $2 million for the rest of that 15 years. It would be really a steep one. So we would like you to consider that aspect.
And we will. Good points. Very good points, and I can see that you've appreciated the fact that there is investment in the R&D continued, and we're happy about that. I guess what I'd be willing to do is to take that 200,000. We think that's reasonable in the sense that it's 10% of the NPV. But I guess what we could do is maybe break that 200,000 into some milestone payments.
Sure.
And you've talked about certain things like maybe regulatory approval in the U.S.
Yeah.
I guess what it comes down to it, I'm comfortable with granting you an exclusive in India for an amount that's maybe less than the 200, maybe an option on other countries that you could exercise
Sure.
and then pay for those countries when you're ready to exercise that option. What do you think about that?
I think that looks good, but in terms of the rights, probably I think we would like to have rights for some other countries also along with India to get started with, because thing is that is something that is going to give our investors some confidence, because otherwise like it may not be very happy. So
Which country would you want to add to India?
Richard, okay, if I can add out here.
Yeah.
Yeah.
If I and Manisha go to an investor, right, seeking funds, the first question they're likely to ask me is, what is your total addressable market, right? And total addressable market, leaving out 50% of the world, is not going to look very good, right? We would like to raise money so that we can develop some of these technologies out for the entire and demonstrate its value in human studies, right? So it's important that we raise adequate funds. If the total addressable market is small, we don't think we will be able to raise that kind of money. So India market being just 2% of the global market, it's not a good case to present to my investors.
Yeah.
So we need to definitely do the US, right?
Okay.
It is very important for our pitch to investors, and we're quite confident that with that we can really take it ahead. And you'll also note that as of now you have animal data for say diabetic wounds, and we think the data looks good, right? But there are still some uncertainties. We have to do it we will need to probably generate data to be satisfactory for the clinical, for the regulators to allow us to do human clinical trials. It will again require some additional work, followed by clinical trials. So it's going to require considerable investments from the company. So it would help if we are given a little more coverage in terms of license, in terms of ability to take it ahead, and we are quite confident that we can be a trusted partner for your company, for UC.
Thank you, Premnath. And John has a comment.
Yeah.
I must express some hesitation about the 2%. We're talking the most populous country in the world. So I'm not particularly convinced. I'm not particularly convinced that the 2% is a good number.
Yeah.
And so the arguments that we need more than India, you're going to have to get a little more convincing.
Yeah.
How much time have we got here?
We could take a little bit longer.
Okay, just a little bit. We got a ways to go. So, I will say this, that I think that we would be willing to lower that upfront fee. But But I think what we need to do is I think we agree that there are steps that need to be taken. You're going to be investing money. And when you hit those milestones of regulatory approval here, I think we take that 200,000 and let's break it up into some milestone, event-based milestones.
Yeah. Yeah.
So we can capture that 200,000. I think I would say, $50,000 up front, exclusive in India. I would say an option. Now, an option on these other countries, meaning that we're not going to license anybody else, but we're not going to give you the rights just yet until you demonstrate you hit these milestones,
Sure.
and then you would ask for the U.S. and there would be an extra payment. So you're going to end up paying a little more than the 200,000 ultimately.
Sure. So
And we want a 5% royalty.
okay. Okay. I think the milestone-based payments, I think that's a good option. That's really going to help us. But I think what we would really need is the worldwide license, or at least like the countries where you have patent protection. I think you giving us the rights for that upfront would really help us to raise money, so that it just accelerates our growth, and even in terms of money, probably I think we may not be able to increase the upfront payment,
Well,
the
I'll tell you
total amount.
What I could do, I guess, is to say that we would, if we can agree then on these milestones, that would be 200,000,
Yeah.
and then when we'll give you the license. In fact, we probably ought to go up a little higher. We probably need to go just a little bit more than the total 2,000, but we could agree on these milestones,
Yeah.
and we'll give you rights in these other in all the countries, but we'll put in some sub-licensing. We'll call them, you'll have the right to sub-license and also mandatory sub-license, where we're going to, if we feel like you haven't been able to satisfy that market, then
Sure.
we're going to have some requirements for you to sub-license
Yeah.
there. And we can talk about negotiating how we'll share in sub-license rights. And the 5% royalty.
Yeah, yeah. So I think this, what you are saying, the sub-licensing rights, I think that should be agreeable to us. But this royalty, the running royalty percentage, again, that is something very steep. If there is a way by which, probably if it could be, even the royalty rates could be staged in terms of the geographies, because we are not going to enter all the geographies immediately.
Okay.
So
I can
maybe
see
if
that.
we could do that, that would
A
really...
blanket 5% maybe doesn't make sense.
Yeah.
And what I would like to see is some analysis, documentation of your cost of goods sold and the
Yeah.
pricing and so on. So we could agree on a royalty rate in India, and then these other countries,
Yeah.
we will arrange. Let's
Yes.
agree on a range
Yeah.
of royalty that will be finalized at some point
Yes.
later in the.
Yeah.
Okay.
So my request would be like, if we could start with lower royalty rates, like say to start with like, maybe 2% for initial maybe 24 months, and every 2 years we probably increase by 0.5%. Yeah, yeah.
Why would you do that?
Yeah, but because that way, like, we would have raised sufficient money, and I'm looking at something which would be a win-win deal for both of us, because you are going to get the higher percentage royalty when we are actually selling more, and the lower rates when we are selling low. But because of lower royalty rates, we might be able to get the investments in a better manner, maybe faster. So if that, but some of these things we
Richard,
would
is it
also...
possible to reduce our outflows at the beginning?
Yeah.
Okay, so that
yeah.
we are not in a bind in terms of being when we raise money.
Sure.
We are not stuck. Milestones are definitely helpful. Okay, and the running royalties need to be something which we can justify in competitive market space such
Yeah.
as this,
Sure.
where it should not be a reason for investors to peg our valuations down and therefore prevent us from raising adequate funds. Right?
I'm in agreement with that. I think let's kind of lock down what the terms would be. I agree that we want to make it easy for you to invest and your investors invest in validating the technology, give the rights that you need in India.
Yeah.
I know we've got still this issue about an option versus a license in these other countries. I think we could refine that in our next round of looking at the details of where we want to be able to capture some value, of course, and we're giving up some, we're taking on some risk by not capturing our 200,000, but we understand why we should do that. But we'd like to capture a little bit more. As you add value, we'd like to share in that a little bit with you. So I think we can firm up India, and then we'll just have to work on how do we give you the rights in these other countries in terms of things like the royalty rates.
Sure.
But we'll use a rational basis.
Sure. Yeah. In addition to that, we also would like an option to have the patent assignment. It would be in future, but we have
With some kind of a balloon payment sort of thing?
Yes. One-time
one-time payment. Yeah.
which we can set as a budget for us to raise when we are raising a certain round of investment. If we don't have that number in front of us, we would not have certainty when we're dealing with some of our investors, and they wouldn't know what it is going to cost to retain it.
Well,
and there have been instances where your office, right, has
oh, you found my Achilles heel.
where your
Yes.
office has not maintained some of the patents and
that,
has
yeah.
messed up.
Okay.
We don't want to take those chances.
Okay.
We want to make sure that the patents are valid all the time, and we are not facing the risk
Okay.
of a lapsed patent. Sorry, there was a comment here.
I have a question from the investor side, but I am afraid that because this process may be getting much delayed. We had evaluated the technology about $2 million. We are reducing upfront fee, and we may be actually producing products much later. So even if we defer all these payments and we end up at the higher payments at last time, that the total price we will be getting for the technology may be less than $500,000 or $1 million. So we need to think about this also.
Sure. I mean, at the end of the day, you want to look at these various payments and, how much are you capturing over time with the total of the milestones, et cetera. I'm proposing there would be some milestone payments, option payments
Yes.
as well. So believe me, I'm not going to lose sight of the fact that, we started with we wanted $200,000 guaranteed. So, we want to try to capture that. I guess my main thing here, I want them to be successful in India. Here's my real strategy. I want them to be successful in India and validate the technology for me. And then I'm probably going to apply a little more pressure as we go forward as you move into these other countries, because I'm still a little concerned about you having the ability to really commercialize there in these other countries. I want them to develop and validate the technology in India. I want them to be successful in India, but then it leaves me with some options maybe to capture more value in these other countries. That's my kind of hidden agenda a little bit. All it means is that I'm going to be maybe a little harder, I think, and when we get to the terms of maybe these, I think option payments for some of these other countries. But I want you to get going. I don't want to get in the way of, you getting going and getting solid investment here in India.
Sure. Yeah. Thank you for that. But will there be some assurance possible from your end that all the upfront payments together doesn't go beyond 200,000?
I don't know if that's the number. We'll have to, on this next round, let's look at the numbers a little bit more carefully. But I think there's a spirit of wanting to get this deal done, and I want you to get, to have India, and I want your investors to be happy. I'm not sure it's going to end up being 200,000 because we're giving up a fair amount here at the outset.
But Dick, you can make a considerable amount in at the time of assignment, right?
Well, there's this.
And we think that
Okay.
if you give us an attractive early proposal, which allows us to raise money, we should be in a healthy position to deliver on the assignment fee in say 48 months.
And do you have a proposed assignment fee, and what's it based on?
You mentioned the NPV of
The $2
$2
million.
million, right? But that would be something which we are willing to do, and we will set that as a goal for our investment round, provided you give us attractive terms right up front.
Yeah.
So you have the option to, you have an opportunity here to have a big balloon payment at the end of 4 years. And you know that of this 4 years, we would be spending 2 years in developing it. It will take us time to take it to market. We would be investing funds, right? And all this will require us to attract other investors, and for that we need attractive terms. So our request is that we do need very predictable terms for US, EU and India, okay? And we prefer to have an assignment fee as an option, right? Which we can set as a reasonable target to our investors to put in to close the deal. And we would be very happy to do that. I'm an alumnus of UC, so I'm really keen to.
Well,
And question for the
Yeah.
company,
Yeah.
like the university was actually willing to give you a license in India, and you are not planning to do any business in US or Europe. You
Yeah,
have
but
made-
I told you what the reason is, right? If I don't have that in my business plan, nobody will give me money.
Yeah. We
Because
can,
it's 50 plus 20, 70% of the global market, right?
If-
No investor is going to fund you for this 2% of the market.
If
Yeah.
70% market lies is in US and Europe, what is the company's agenda behind going for the Southeast
No,
Asian?
we do want to go there, but not immediately, right?
we will go there with partners, and to get the partners interested, we need to show early traction, and that we are going to show
And it's
it
going
in.
to cost money for clinical trials, for setting up a new facility which is US FDA approved, all of that. So it's not an immediate plan, but it has to be in the projected plan, right? So we think, let's say if we are entering the US in say 36 months time, for that I need to project right now in order to get an investment which is sizable, right? With 2% Indian market, I cannot raise that kind of money, right?
Yes.
And if I project only that, I will grow, I will have to run a business where, like now, we are just growing on our earnings and not necessarily on raising investments, right?
But there was a very good deal from the university side where they were stating that at this point of time they are not willing, they will not give to anyone else in US and Europe. Whenever you are going there, then they are ready to license that.
Yeah.
So why can't we take that kind of an option?
Yeah, only that's a very good option, but we want them to make it available in a reasonable price.
That is already available and then we have
No, we would like to fix the terms
Terms,
of the
right.
fee right now,
So what I would-
so that it's predictable.
I guess what I would request that you make some projections about, Tam Sam Som in these other markets, and then let's agree on what an option fee would be.
Sure.
And I think if we can agree on these option payments, where you exercise your option, then I'm really quite willing to lower the upfronts to hardly anything, to make it as easy as possible for you to begin your efforts here in India.
Sure. Okay, but we would do that. We will provide those numbers. But at this point, what we feel is an assurance and also the commitment on the amount,
Okay.
at which we would have this available. That is going to be very
So
important.
let's agree then that between us, let's do a Tam Sam Som. Tam total addressable market, SAM, serviceable available market, SOM, serviceable obtainable market for these other countries. At least a preliminary one, so we can kind of see what you're going to do. And then we can agree. And then we'll pinpoint it. And your investors should understand the role that that's playing. And I think we could, we'll lower these upfronts.
Okay.
That I'm willing to do.
Yeah, we are happy to share that, but Manisha is going to be visiting some investors in San Francisco very soon, right? Within a week's time. So we would like at least something which we would like to show to them so that, you know, there's a better chance of raising money. Otherwise, they're pretty, worried about the uncertainties around the license
Yeah.
terms.
Yeah. Well, you
Can
can
you do something in those timelines?
potentially, I presume you know what the markets are in these other countries, yes?
Yes, we
And you can
have.
make some projections about what your market capture will be, et cetera, and how you're going to price, so we can get some understanding of what this market.
Yeah. So
Yeah, we could do that. I mean, we can work together. Let's work together on this. I think we could. I'd be happy to be helping you make a presentation to your investors.
yeah, sure. Thank you very much for that option. Yeah.
I have a question for Smallco. Why we are not considering this is proven on the animals trials?
Sorry?
This technology is proven on the animal trials. So why Smallco is not considering that risk of failure and all this means why this point is not considered in the discussion?
Yeah, that's a good point. Many of these products, they fail when it comes to human studies after animal studies. So there's a high chance of failure, which we are willing to absorb. The cost we are going to bear. That's an argument that we could have made as well.
Yeah.
Agreed.
Yeah,
So
sure.
anyway, I think we'll stop here for a moment. What the intention
point.
was, but also, you know, what typically happens is that a typical entrepreneur is new to it. They are not necessarily all savvy about it. They're also hesitant. They don't know what to reveal, what not to reveal. They're trying to read the other side, whether they would be really, willing to work with us or not. All of that is happening, right, simultaneously. So it's not a conversation which you can close immediately, but at least you can begin some kind of a conversation over there. As he said, the next thing to do is to come with a plan and say that this is what I want to do. How can you help me make that happen?
And I'll just say that, in my experience, what we'll do is, we'll have some of these early stage discussions. And then when we get down to the point of like a face-to-face like this, we'll find areas of agreement.
Yeah.
Great, let's agree. You want India, we want to give you India. Great, and okay, we can kind of agree on certain terms. But there's still some that are kind of outliers. Sometimes I'll say, okay, let's set it aside for a little bit. Let's go back. That's why I was suggesting let's do a little bit of further work together.
Yes.
Because we haven't really agreed on some 2 or 3 key points, but we do have a lot of agreement. It's just we don't have 100% agreement yet.
Yeah. Yeah.
But we'll
Yes,
get there.
We have not agreed for $200 upfront fee, but it is on milestones initially. But what we
He has suggested that,
Yeah.
right?
But what we can afford initially, like it can be 10,000 also be agreeable to them.
No, that's that.
Or we
If
have to work out and discuss in next.
yeah, so the question is, they can go back and see how likely we are to hit the next milestones and peg it around that. And our team can also look at those numbers and see whether we can hit those milestones and arrange those payments. So if I'm raising in the next round, it said seed round was $2 million, right? That's what we were planning to do.
Yeah.
So in $2 million, we should be able to set aside some money to pay, right? Even if we have agreed on paper, raise the money and pay that amount, that's also okay, right? So, but what would be nice to have in this case is that if they can get the rest of the payments, right, predictably, by the time you hit the next 2 rounds,
Yeah.
right, great, that's fine, right? And it should be possible to arrange it in such a way without necessarily making it hard for the company. That's something which one has to consider various options. Anyway, I think you have a
One,
point.
one more point we could consider here that since Smallco is the only one which had approached you for over the last 4 or 5 years, you
She doesn't know that yet.
no.
But she knows in the back end, yeah.
Yeah.
Right.
Here I would like to bring in the point of considering the first right of refusal for other territories apart from India. Would be considered as-
When I was talking about option, I think that's what we'd end up with is this area of negotiating, those rights, first right of
Yeah.
refusal or automatic license with a payment, that sort of thing.
Yeah.
And I like the idea of going together to some degree to go talk to your investors. That,
Yes.
that we're with you, And I was also going to say, would you also be willing to be the star of a video where we show the world how good we are at negotiating licenses with, female CEO
Yeah.
and women-run companies?
Yeah, yeah.
Okay, thanks.
Definitely.
Would your position have changed if she was a faculty member from your university?
Well, we'd certainly bring in the factor of conflict of interest. Are you going to be funding any of this work? Any of the validation work is going to be funded by the company into your lab? If that's the case, maybe we got a problem.
Yeah.
We at least have to deal with that problem. But no, not really.
Okay.
Will you give more favorable terms?
I'm not going to say it.
Can you agree because we are committing that we will be investing money for the further development of the technology. So can you give off at this stage the complete upfront fee and you invest some $1 million for the development of the technology and after that you start upfront fee. Can you agree for this also? Because we will be having a big risk by putting so much money for development and validation of the technology.
Well, I think I said that we would be willing to, lower that up front significantly. My last offer was $50,000. I said, and maybe even practically zero. If we can agree on these other, the next steps and stages and milestone payments, because I'm hoping we make more than $200,000, frankly, as they add value and I think, because we're taking a lot of risk if, we give up all this up front and so on. But yeah, I want to make it easy for them to get into it.
Yeah.
Okay, I think let's stop
Sure.
here.
Yeah.
Let's give a round of applause. And thank you for Manisha for braving it.
Thank you. Thank you very much.
We're still friends.
And assignment actually to them because they have to maintain the patent for the next 15 years actually. So that will be more expenditure on the company side.
But on the other hand, it is predictable for the company. Be able to take the company ahead and how the valuation will grow, right? Now, if it is a assignment to the company, they are also thinking of the possibility that they can actually sell that entire thing to another entity, right? That's also possible. Right? Which is not possible if it's just a license.
I'd like to ask what an assignment, does an assignment mean the sale and termination of future royalties?
Yes.
Oh, well, there's no way I do that.
Well, see, that's the thing is that I had to really suppress my inner urge to go like, no way, no assignment, because we don't do it. We think it's a bad idea. But I know here that is something that's done.
Yeah.
So I had to resist because I'm with John. No, we would never do that. But even if you paid us a lot of money, because then that starts to show that the only thing we care about is money. And that's not true. We want other things. We want to stay involved. We want to see wound care. man, this is so important. We want the technology to be successful around the world. So that's why we want to stay involved.
No, but see, this is a little contextual thing as well. See, what happens is, in the US, some of your processes are well established, right? There's no uncertainty about the patent, right? There are institutions in India who will forget to pay their maintenance fee. Okay, there are people who may not maintain it, or they say they run out of money. Okay, what happens then, right? The investors won't take that chance, right? That's the issue. They don't want to take that risk.
Well,
and what if the leadership changes, right?
I am willing to say that we would do something to the effect that we would give the company the ability to make sure that they knew all payments when payments are due. In fact, we maybe even give you the right to be the recipient of all the, patent office announcements. Of course we would, So we'd like to manage that problem.
Yeah,
I just don't want to sell it. I don't want to give it up.
No, I understand your position, but I'm also saying from
Yeah.
a practical position,
Yeah.
this is a risk that investors won't take up in India.
Now, so
Right?
let me just say that
Yeah.
when I started doing this in the 90s, early 90s, we would say we're not going to sell it, and our licensee would come back and go, well, our investors say they don't like that, and I go, I know, sorry. And guess what? The investors grumble, okay, we'll give them the money anyway. So we fought through it, all right? And so that I still would recommend not assigning it.